All right, let's watch this video of Joe, MicroStrategy Joe Burnett. It's 4 minutes. I'm going to move the time up a little bit, but I really like this guy. Actually, I've been watching more of his stuff a little bit more lately. I think he's with Unchained Capital, but he's talking about MicroStrategy here. So we're going to watch this video. We're going to talk about it. I have about 10 things to talk about with MicroStrategy. And again, before we get into this, I should give a disclaimer, not that this isn't financial advice. This is financial advice. And if you want to try suing me, go ahead. But if you have cash on the sidelines, if you have a savings account, if you have a GIC, if you have money that's out of the financial system, buying Bitcoin, holding your keys, that's number one. As Michael Saylor says, there is no second best to that. But I would disagree, because there actually is a second best, and it's his company. So if you don't have the ability, if you don't have cash, if you don't have money on hand to buy Bitcoin, MicroStrategy, in my opinion, is the second best option there. And that's for the money that is still, if you have a pension, if you have a RSP, whatever it is in the US, IFA, Roth IRA. If you got one of those, that's when you look into MicroStrategy. So we're going to listen to why. I titled the show "The GameStop of Bitcoin." That's kind of what he talks about here, because there's a company called Carisdale Capital, and they've made headlines lately because they're actually shorting MicroStrategy and they're long Bitcoin. That's their strategy here. Their strategy. Not a very successful strategy by the looks of things right now. So let's listen to what Joe has to say here, and then we're going to talk about it after that.
What's the correct way to value MSTR? MSTR has had a crazy run recently, and there's been a number of people trying to figure out exactly what's happening here. I think there may be a couple different possibilities that are leading to MSTR's strong outperformance over Bitcoin. One, you have the Carisdale Capital trade potentially blowing up. Currently, short interest on MSTR is over $3 billion. This means that $3 billion is betting that the price of MSTR is going down, which ultimately means they must eventually buy back the stock to close their short position. A significant portion of this short interest may be funds like Carisdale Capital. Their thesis is public and perhaps a bit too simplistic. They are short MSTR and long Bitcoin. Their logic is that MSTR is mainly just a holder of Bitcoin, and therefore the stock should trade at the current value of the Bitcoin they hold. Meaning if MSTR holds $15 billion of Bitcoin, the market cap should be about $15 billion. However, that's not the case. When Carisdale opened their trade, the market cap of MSTR was well above $15 billion. Hence, they thought MSTR was significantly overvalued for no reason. But their trade has gone the wrong direction. The premium MSTR trades at continues to expand, meaning entities short MSTR are likely in big trouble. Now, the question is, why does this premium continue to expand? How is MSTR going up while Bitcoin is fairly flat? Well, maybe retail and even other large hedge funds know Carisdale and others have this trade on, and they're trying to push the MSTR price up, keep the Bitcoin price low, and blow up these hedge funds that are short MSTR. Why would they do this? Because then they can force Carisdale to collapse, close their short positions, and be forced to buy back MSTR at a crazy high valuation, as the $3 billion of shorts are forced to close their positions. This is basically the ultimate short squeeze, just like GameStop, except MSTR is actually valuable because it holds more than 1% of all Bitcoin. The second potential way of valuing MSTR is by actually modeling out its new Bitcoin yield financial reporting. As of the end of September, MicroStrategy reported a year-to-date Bitcoin yield of 17.5%, according to their recent 8K filing. This increase means their Bitcoin holdings per diluted share grew by approximately 16,000 sats. If we consider this growth in Bitcoin per share as MSTR's earnings and compare it to a company like Apple, which currently has a price to earnings ratio of 34, we can draw an interesting comparison. Assuming MicroStrategy can continue growing its Bitcoin holdings per share, we could estimate its valuation using a similar PE ratio. Applying a 34x multiple to their Bitcoin yield would imply a valuation of around $346 per share today, based purely on this Bitcoin yield growth without any change in the price of Bitcoin itself. Of course, there's no guarantee that MSTR can maintain this rate of growth in Bitcoin per share, but it's likely that the Bitcoin on their balance sheet will become significantly more valuable over time. This model enables us to rationalize the massive NAV premium, and it gives us reason to believe that it could continue to expand. And the most fascinating part about MSTR is the higher the NAV multiple, the higher the Bitcoin yield on additional at the money equity offerings and additional convertible notes. So it kind of becomes this weird catch 22. If there is no NAV premium, it would be very difficult for MSTR to generate a Bitcoin yield. But if there is a NAV premium, then MSTR can generate a Bitcoin yield. And the larger the premium, the larger the potential yield. So sure, maybe this price action in MSTR and meme coins feels like a top, similar kind of to the March of this year. However, we're living through hyper Bitcoinization, meme coins, meme stocks, and multi-trillion-dollar physical deficits. This chaos might just be part of the monetization process. Thanks for watching, everyone, and see you next time.
Okay, it's a lot to take in. I would suggest if you want to, understand that a little bit more, take some time today, watch the video again, look into what he's talking about, and just get a good understanding of that. And don't get me wrong here. A couple things. Number one, I do hold MicroStrategy. I don't hold a bunch of it, but I do. So I'm an investor in it. So some slight bias here for sure. But the second part there is that okay, we're gonna run through. How much do I got here? Okay. So there are reasons why, and yesterday we talked about it on the show of why MicroStrategy is trading at such a premium there. He said that the Kurzweil Capital, their thesis is that because MicroStrategy is basically just a company. I mean, they're a software company. They do earn some money, actually quite a bit of money, millions of dollars every year that they're putting back into Bitcoin. But he's basically saying like this company should be one-to-one with Bitcoin because that's why people are holding the stock. But in my mind, like you look at, there's a lot of really big institutions who are not holding Bitcoin or the Bitcoin ETFs, but actually holding MicroStrategy. And so you have to ask yourself why. And you have to ask yourself why there's such a premium in compared to, they're talking about sats per share. And I think that's going to be the main measuring stick as Bitcoin continues to reprice everything. Every company that's public that you can buy shares from, you're going to know what their sats per share are. We're obviously not there yet. There's only like 3 or 4 companies who hold Bitcoin that are public. So this is talking about MicroStrategy, but this is also like a summary of why every small business, whether it's the cafe whether it's, who was this, Ian? Whether it's Ian's Cafe in the UK or like a telecom company here in Manitoba or whatever it is, every company should be doing this. And MicroStrategy obviously has more leverage now. They're an early adopter of this. They were the one who came up with the strategy. They're basically just like completely gaming the financial system, the stock market. It's wild to really dive into, but I'm going to give a couple things here of why. So think about MicroStrategy, but also think of like your business or a small business in your area this is why companies are going to be buying Bitcoin. And every company that adds Bitcoin to their balance sheet, that's going to make your Bitcoin more valuable. That's how the network adoption grows here, and the demand for Bitcoin will grow. So first of all, we talked about yesterday, why is there a premium on it? And I think one of the major reasons is because a lot of these funds, I think it was the Swiss bank who's been buying MicroStrategy. A lot of these funds, hedge funds, these investment companies, they actually can't buy Bitcoin. If you're a public company, there's certain regulations within your, I keep blanking on the name for this and I should know it. But they actually can buy Bitcoin. And there's some of them who also can't buy the Bitcoin ETF or any sort of ETF. So MicroStrategy is their only way of getting it into Bitcoin. And just like Bitcoin, there's a fixed amount of MicroStrategy shares. You can't print more of them. They can issue more and they can do a stock split. But if you understand the economics behind that, it actually helped the stock split. So that's number one. The rules is that a lot of these big institutions, the big money, actually can't buy Bitcoin or Bitcoin ETFs. And that's why there is such a premium on MicroStrategy right now. And if you look at the stock performance, it's pretty easy to see why MicroStrategy is catching a lot of people's attention. It's the best performing asset in the last 4 years since they adopted the strategy, better than Bitcoin. I think about the same as NVIDIA, but then after that, it falls off dramatically in terms of performance since they adopted the strategy. Also, the psychology behind the stock split now. So about a month ago, maybe 2 months ago, they did a stock split where if you had 1 share, you now have 10 shares. So even though there's more shares out there, the actual equity itself did not change. So that means if the original stock was $1,000, after the stock split, it should be $100. Nothing else changed. There was no new, there was new shares, but there wasn't an actually increase in or decrease in equity. So that's kind of what happened. And so if you consider that, the human psychology aspect of that, I think that's why they did it. The sole reason they did it is just the psychology behind it. Because if you see a $1,000 stock versus a $100 stock, and for retail investors especially, it's much easier to pull the trigger on a $100 stock versus a $1,000 stock. And as it doubles, if it went to 2,000, that takes out a whole new crop of people versus going to 200. Most people can still stomach that one. So they did the stock split, the psychology behind it. I think that's going to allow a lot of new people to now hold MicroStrategy that just weren't able to before. The other part of this too is we're only 4 years into the strategy. It just seems like Michael Saylor is getting going right now. So he's not going to stop. I think he talked about a 17% yield there on Bitcoin, which is almost unheard of. But it's because they have the ability to sell their shares when the price goes up, buy Bitcoin with that, increase their sats per share, issue debt, take on debt for a very low price. I think their average is less than 1% of their convertible debt. And so that's how they're earning yield on this. So he's not stopping, he's not slowing down. And as this whole thing continues, as Joe called it there, catch 22, it's only going to spiral. So you have two different things right now. You have somebody like MicroStrategy, Michael Saylor, who's spiraling upwards with the yield with Bitcoin. And you have the other side of things, the old system, the fiat world, who's so entrenched in debt that they're spiraling down. So that's why there's such a divide there right now. So he's not stopping. And in addition to that, you have the lower management fees. If you're holding an ETF, I think the fees on that are about 1%, maybe some are a little bit less, some are a little bit higher, but you're paying an annual management fee that's taken your Bitcoin essentially. MicroStrategy doesn't have a management fee involved with it. It's just a share. So if you're thinking about this, and this is how I want you to think about this, is not like something that you can buy, it's going to go up in a month and sell it. Think of it very much like Bitcoin, where you're going to buy it, you're going to get through one cycle, 1 4-year cycle, and then you're going to reevaluate from there. So think about this very long term and how much that would actually add up if you're planning on holding the stock for 10, 20 years. Think about what that 1% fee every year is going to do to your portfolio versus something with no fee. And the other part of that too is again, this is money that's stuck in the old system that you don't want to be taken out, paying transfer fees on, paying taxes on. That's when you buy MicroStrategy, for the money that's trapped in the old system. Oops. So here in Canada, we have a thing called the TFSA, where you can buy stocks. You don't get any sort of tax deduction for it at the time, but you also don't pay any tax on that. So the people who are worried about taxes in Bitcoin, take some of your TFSA, buy MicroStrategy, sit on it for 5, 10 years, and you're not going to pay any tax on the gains through the years of that. Zero tax. You can do that with Bitcoin, but not legally yet. So there is still a way where you can actually see the growth of Bitcoin, be part of that, and not pay any tax on it through MicroStrategy. I mean, the other route would be holding a Bitcoin ETF. But as we said, there are disadvantages to that as well. And the other part too is you think with the Bitcoin ETF, if you're holding an ETF of an asset and you wanted to cash out, you could actually take the Bitcoin. So you call up BlackRock, you say, okay, I want to get rid of my position in IBIT. I want to sell it. I want my Bitcoin. That would make the most sense. But unfortunately, that's not the case here, because the way that the ETFs work in the States is that when you sell your shares of IBIT, you cannot take Bitcoin. You have to cash it out first, and then you have to buy Bitcoin. So in terms of the ETF versus MicroStrategy, there's no real advantage there. You're not actually owning the Bitcoin there. You're just owning a ticket to it. And then you have to cash it out. You have to pay tax on that. And then you have to find a way to buy Bitcoin after that. So there's no real advantage of owning an ETF over MicroStrategy in that sense, which there should be. I think it's called in kind. If that ever changes, then I think that there will be a lot more demand for the ETF if you're able to sell it, your share, and actually cash it out and get the Bitcoin back instead of just cash. I think the demand will increase for that, but it's not the case right now. So the other part of that too is that think about Saylor and MicroStrategy own 1% of the Bitcoin. 1%. And currently they're a software company. That's their main business. They're earning cash flow. They're putting that back into Bitcoin. So they're using their business operations to buy Bitcoin. When the share price goes up, they sell the shares, they buy Bitcoin. When it's down, they offer debt to people, or they acquire debt, take on debt, buy Bitcoin with that for very low rates. And the beauty of that is that all of these things increase the sats per share. All three of those things. So profitable, earning operational income, buying Bitcoin with that, that's going to increase your sats per share because you're not issuing new shares, but you're getting more sats. You're selling shares when the price goes up, you're putting that back into Bitcoin. That increases your sats per share because you're not issuing new shares. You're just selling the shares that you already have. So that increases the sats per share. And then taking on debt and buying Bitcoin, that increases the sats per share. Because again, they're not issuing new shares. They're just taking on debt for a very low rate and they're buying Bitcoin with that. So to me, this just seems like an absolute no-brainer. And that's kind of current day where they're holding this Bitcoin for a while and they're still a software company. But imagine what kind of influence and power and ability that they're going to have in 10 or 20 years from now. Think about how much they're going to be able to buy with that. So they have a software company now. Let's say that this, very similar to like the comparison between the house prices and fiat and Bitcoin, replace that house with like different businesses, different industries. So to buy a, I don't know, insurance company back in 2015, maybe it cost you $5 million, right? Fast forward to today, maybe that same insurance company is valued at $20 million. So it's gone up in fiat terms. But if you compare it to the actual Bitcoin value of that, it's gone down significantly. And it's going to keep going down significantly in comparison to Bitcoin. It's going to go up in fiat, down in Bitcoin. So for a company who's holding 1% of the Bitcoin, just understand how much future leverage they're going to have in terms of being able to literally buy whatever they want, whatever's profitable, turn that cash flow into Bitcoin and keep going. So they're not going to sell their Bitcoin. It's not like they're going to sell their Bitcoin and buy an insurance company. They're just going to use it as collateral to take on debt, to buy an insurance company, to buy a bank. Like, you understand it, I think. It's wild. It is wild.